There's no such thing as breaks of structure in the way that you've been taught. Every break of structure that you've ever marked on your chart is likely a higher time frame AMD, accumulation, manipulation, distribution. That is how the markets move. So when you see break of structure, what you could be looking at is manipulation to distribute against your position. And that's exactly what happened with this 2.4R on GBPCHF. So let's work through what a traditional break of structure looks like and actually how to reframe your thinking to see how the markets actually move. So if I just take this away, what I want to show you is the traditional way of looking at breaks of structure, which is we're sitting on the 12-hour time frame. So this could be any time frame as price is fractal. But what I want to show you is when you combine time frames correctly, you can get into very high probability trades. So I'm swing trading. So I'm looking at the 12-hour time frame in conjunction with the weekly, 2-weekly, and monthly time frames. So what we see on the 12-hour chart in isolation is a valid pullback and a close above. So we have closed through this structure. So what that would say is that these lows are now protected. We have pullback, continuation. We're now looking for pullback, continuation. However, you see straight away what happened. Price is dumped. So why is that? So let's just take away this strong low and keep the break of structure point. And as I said, I'm always trading higher time frame candles. So let's first start by looking at what's happening on the monthly candle. Well, this aggressive price action on the 12-hour is actually driving into the previous month's high, because this entire area is the entire monthly candle range overlaid behind 12-hour price action. So what you see is the price breaks into the previous external range liquidity at this high and then drops. But this is where it gets even more interesting. If we overlay the weekly candle, what do we see? Price has broken out above the previous weekly range. So if I take away the monthly very quickly, because we see that this is a previous monthly high, we have AMD on a lower time frame. The weekly AMD pattern is nesting inside of a monthly AMD. So in this weekly candle range, price was bullish. We then saw a breakout above the weekly high and the previous monthly high. This is our break of structure. But that's not what is happening. Price is liquidating the previous weekly range. What happens next is that it closes inside the previous week's range. That exposes our first target in the market, which is the low of the accumulation candle, because this is how markets move: accumulation, manipulation, and then aggressive distribution. Now, if we bring back the monthly candle, what do we also see? Well, we also have a previous monthly low as another target in the market. So as soon as this weekly candle closes, this is not a break of structure. This is a lower time frame structure shift to confirm candle distribution. What we can do then is just simply create an entry, cover the highs, and trade back to the confirmed targets in the market. 2.4R swing trade, that is extremely high probability. And this is not something that we need to see as a structural low in the market. This is a higher time frame target. And that is exactly why you keep getting stopped out, because you're looking at break of structure all wrong. Let's look at another example on EURNZD. So if we were to take this 12-hour market in isolation, what do we see? Well, here we get a break of structure. We get a close above. Price then drops below and essentially stops us out. We also get a new break of structure. So now we're looking for shorts, but then price explodes bullish. What's going on here? Let's just overlay the weekly candle. So what we see is that, again, we're manipulating above a high. We're seeing a structure shift to target the lows, but then price explodes. What we see is, again, just manipulation of candles. So the previous weekly candle broke below, enticed shorts, and then closed above or closed inside the previous weekly range. So that exposes this candle's high as our target for price. That's exactly how markets move. Same thing here. We see price trade up and then break lower. So we see a break of structure. This also could be seen as a structural break in the market. But here we see the candle closing down. So what's going on? Well, we just look up a time frame. This is a 2-week time frame rather than a weekly time frame. And the exact same thing is happening. Accumulation, price is breaking below the previous 2-week candle range and closing inside. So as soon as we get these structure shifts, we have confirmation that we can go long. And this is a long entry from the fair value gap covering the swing point, and we target where? The high of the accumulation candle. But again, the monthly candle closed bullish. So we can hold this. This turns into over a 3-hour swing trade. This is how to trade the markets. This is how I trade the markets every single day, and have a 3-part 30 video series on exactly how to trade AMD and how to correctly identify market structure to get into high probability swing trades. So if this is interesting, head over to my channel, subscribe, and check out my free videos. See you on the next one.